Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler with your weekly Edge show. Today we are, as usual, going to take a look and see where did we close the week. It was a rather volatile period. We did close below key support, and from there I will share with you what to be on the lookout for going into next week, which historically is a bullish week. It is called the Santa Claus Rally. It includes the last 5 trading days of December into the first 2 trading days of January. So that also ties into our viewer question of the week as far as what to be on the lookout for and how you can potentially play any possible rally into next week. Also, today, of course, we will take a look at some of the headline news that drove last week's choppy price action, and then also news headlines that are due out next week that could be equally impactful. First up with this week's news, we did get earlier in the week the Consumer Price Index. This is a very closely watched inflation gauge for the Federal Reserve, and it did come in lower than expected, which was good news for the markets. However, as the week progressed, Fed Chair Powell on Wednesday came out after the Federal Reserve's meeting and announced that 0.5% rate increase, which was anticipated. However, he did talk about the very high likelihood of elevated interest rates well into the entirety of next year. That was not viewed as good news. As usual, recession fears continue to emerge, which in turn put downward pressure on the markets. The S&P down 2%, NASDAQ 2.5%, and so on. Also last week, Fed Chair Powell did lower his estimate for GDP down to 0.5%. That was lower than originally anticipated for the first quarter. Another piece of news not positively viewed. And later in the week, we did see weekless jobless claims did drop, and that is not what we want to see. The Federal Reserve is on the lookout for raising unemployment in turn so that consumer spending will drop and then hence inflation. Also, we did see retail sales post a pretty large decline. However, a closer look at that number revealed that it was primarily due to a big drop in auto sales. Beyond that, consumers were still out there spending, which again is not what Fed Chair Powell wants to see. Next week, we will be getting PCE, which is another highly regarded inflation gauge number. That's later in the week. And then also housing data is going to be released. And the importance here is that we did see an uptick in home construction or home building stocks this week on upgrades. So we will see how that plays out. Also last week, we did see a PMI, another inflation report that points to a weakening economy. So overall, a lot in the way of mixed numbers, but at the end of the day, there is again that overriding fear of a recession, which then pushed the markets lower. So from here, let's go ahead and take a look. Where did we close for the week? Here we are with the daily price chart of the S&P 500. And what I want to point out to you here is that we did close the week below this key 50-day simple moving average. There was a need for the markets to find support there. It did trade certainly lower than the lows on the day, but again, below that 50-day. We also have that RSI momentum indicator in negative territory, as well as stochastics, which are down here in negative territory as well. So in essence, this downtrend reversal or bear market rally that took shape in the middle of November has been reversed. So I did mark up a prior period when we had a bear market rally that reversed, and those characteristics that signaled further downside. We can see a negative RSI was one of those signals and a negative stochastic. So we did get a little bit more of a rally before further deterioration. But at the end of the day, the close for the week in the S&P 500 is not positive. From here, we can take a look at the NASDAQ, and this too also closed below that 50-day on Thursday and continued to trade lower. Outside momentum indicators in negative territory. For the NASDAQ, your next area of possible support is going to be this early November low, and then from there, mid-October lows. I'm going to take us back to the S&P 500 very quickly because you do want to be aware of near-term potential support now that we've broken this 50-day for this index as well, and it too will be this early November low as that next area of potential support. So let's take a look beyond the daily price chart, and I do want to point out to you that the S&P 500, some of the ways you can tell that it is oversold after this week's pullback. This is a 15-minute price chart of the S&P 500, and when you have that MACD getting into this area below 30, that is indicating an oversold position. We need only go back to the beginning of this month to see a similar move of that MACD below 30, which then in turn did materialize into a multi-day move to the upside beyond that. Let's go ahead and take a look at a 1-hour price chart. We'll drill out just a little bit further. And this too is also showing an oversold position on that MACD. We can see this moving average convergence divergence down in this very low quartile. Again, in this case, it is similar to the early November pullback that we experienced. As it relates to a buying opportunity, we will be on the lookout for that MACD black line up through the red on this 1-hour price chart with this RSI continuing to trend upward. That would be a signal that we could be in the throes of a potential Santa Claus rally. So from here, let's take a look beyond the broader markets and look at what may have taken place within the 11 sectors. And the importance here is you want to make sure that you are not overweighted in the really weaker areas. And if you are a shorter term trader, very nimble, which areas are experiencing relative outperformance so that you could potentially participate. So up here at the forefront, we can see XLU, XLP, and XLV, that is utilities, staples, and healthcare, all here at the forefront, your defensive areas of the market. And then as we move down to these weaker areas, we can see consumer discretionary was down almost 4%. A lot of that having to do with Tesla, which dropped 16%, a heavyweight. Also last week, that retail sales number as it relates to reduced car sales hit General Motors, Ford, and other automotive stocks. Also down here in the weak quartile are financials, and this week we did see the group XLF break below each of its simple moving averages, a negative RSI, MACD now down in negative territory. So from here, I will go ahead and share with you one of the weakest areas within financials, again, making sure that you don't have participation there. And then two, up here in the forefront, we're on the lookout for these areas that have been strong. And in particular, healthcare is an area where buyers did come in on the dip. However, the RSI is now in negative territory. I'm going to get quite a bit more into the dynamics within healthcare and what to be on the lookout for going forward. There is still strength there that can be played with my MEM Edge report. You can use the link below. That comes out on Sunday. So from here, let's take a look beyond the broader ETFs, and we can look at the underlying components, some of the ETFs that represent growth and other areas. I'm going to go ahead and update this. So I'm using ETFs, again, strength to weakness. So up here in the forefront, I talked about areas within healthcare that are exhibiting outperformance and continued strength. One of them is the biotech IBB. This particular ETF actually was flat for the week. So very good, certainly compared to the broader markets. We can see momentum just dipping into negative territory, keeping a close eye here, but I will share with you a stock that is setting up really quite nicely if you want to participate in this strength and if we do see any rally into next week. Some other areas down here in this lower quartile, I talked about financials being one of the weaker areas, down 2.2% last week, but the chart is now showing that financials are in a downtrend. We can take a look here at the weakest of these ETFs that I use, and that is KRE. This is the regional banking ETF. We can see that this particular group has come under a lot in the way of distribution, very much in a confirmed downtrend, entering into an oversold area. I'll share with you beyond this one of the ways or the reasons why these bank stocks are really coming under selling pressure. In fact, I can share that with you now because what I'm taking you to here is the yield curve. So in essence, down here on the bottom, we have the time periods, 1 month, 3 month, 6, 2-year, 10-year, and so on. And what is taking place here is on the left side are the interest rates for that time period. So as you can see, shorter term interest rates are much higher than longer term interest rates. And this is called an inverted yield curve. It has in the past foretold recessions, or it certainly is telling us that investors believe that we are coming into a recessionary period. But more importantly, relating to banks is these banks often make high profit margins when these shorter term interest rates are low because they borrow funds at this shorter rate, and you want the longer term interest rates to be high because that's the rate that they use for those loans. So this inverted yield curve is not beneficial in any way to these bank stocks. From here, I talked about taking a look at a couple of stocks that look compelling going into next week, whether we do see a rally or not. First up is a biotechnology stock. I may have mentioned this in the past. It's ALNY. A couple of things really draw my eye to this chart. One is the fact that it did hold in remarkably well in an otherwise difficult period for the markets. I can also share with you the dynamics relating to this RSI up here in positive territory, and we can see that your MACD still trending upward. We never had that crossover, and overall the stock is poised to break out of this long multi-month base. If we can get up above this particular high here at about 240, the stock should continue into a nice uptrend. Another area that I can share with you that has a bright spot last week is silver SLV continuing to behave well in the sense that we had that move up with the markets and it pulled back less than the broader markets. Your outside momentum up here in positive territory, and actually gold stocks are holding in well also. GLD, we can see that it's below this 200-day, but your outside momentum is still quite constructive. So those would be areas certainly to pay attention to, as well as other areas that, again, I'm going to get more into detail with my MEM Edge report over the weekend. Everybody have a fantastic weekend, and I look forward to seeing you again here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.